Trezor has issued a urgent alert after support from exploit sends phishing email. Welcome to the CryptoFather channel. Today is the 24th of June. Come for the news. Stick around for more news. Before I jump into the articles, let's have a quick look at the coin market cap and the stats on that, and then the Bitcoin charts. Coin market cap right now is at $3.3 trillion, $137 billion in trading volume. Bitcoin had a nice dump and then a nice pump. Apparently the news of the war are not phasing it. I don't know if that was a panic sale or if that was a calculated pump and dump scheme. Bitcoin at $103,000, Ethereum back at $2,350. Unfortunately, we didn't see Ethereum maintain that $2,500 level. It dumped 12% over 7 days, but it did recover half of that, almost over half of that over the past 24 hours. So that's good. Good. Ethereum is pumping back up. Cardano at 56 cents. Toncoin below $3. Still Litecoin at $83. Polkadot $333. Picoin at 52 cents. We're probably going to see a massive dump on Picoin. Meowcoin hasn't even recovered. Meowcoin continues to dump even further right now at a quadruple 05 with $416,000 in market cap. Quick look at the Bitcoin charts. Bitcoin's printing a nice green candle on the weekly right now. The wicks wicked all the way to 99. On the last week, it wicked well below the support here at 99,000. It dunked to 98,000, but right now this week's candle is resting very comfortably on the 101,000 Fibonacci support of 0.382. So that looks to be a nice comfortable support at $100,000 for Bitcoin. On the daily, it's a similar situation. We had a red candle. Actually, there were 4 red days, and right now Bitcoin is resting nicely on the 101 fib support, forming a green candle, and hopefully that's going to continue pushing upwards. We have this resistance here at $104,000. If it does break above that and manages to close another candle above this resistance, then we might see another push for Bitcoin, but we still have to wait for that to happen. Ethereum, of course, tends to follow suit, and so we see a nice green candle on Ethereum as well after a 4-day streak of red candles rather. Actually, Ethereum has been dumping since the 11th of June basically, and so this is the first proper green candle on Ethereum that we're seeing. Like I said before, we could still see a retracement of Ethereum. It could possibly drop to $1,800 to recover these candles. Hopefully not. Hopefully the $2,000 support will prove to be supportive if it ever does manage to dump that far, but hopefully it won't. Hopefully we're going to see only upside from here on out. And the overall total market cap for altcoins is also seeing a nice green candle. This chart looks very similar to that of Ethereum, to be quite honest with you, right? Look at this. We've had a nice 3-day pump here, pump, and then a bit of a decline, and starting on June 11th, dump just like on Ethereum. Basically, Ethereum is leading the trend in the market cap for altcoins. On the weekly charts, this is what the total market cap for altcoin looks like. Like I said, it looks very similar to that of Ethereum. So what happened to Trezor? Trezor issues an urgent alert after support form exploit. It sends phishing emails. What users must know. Trezor has issued a high priority security warning after hackers or attackers exploited its support contact form to send phishing emails to users. We have identified a security issue where attackers abused our contact. Let's go to the X account actually. Where attackers have abused our contact form to send scam email appearing as legitimate Trezor support replies. These scam emails appear legitimate but are phishing attempt. Remember, never share your wallet backup. It must always stay private and offline. If you haven't received this, this is not, I think, the only email that has been sent out in this way. I've received a couple of emails in my Protonoma email account, and it looks very fishy. Basically, the email that I received said that my information has been leaked on the dark web for some strange reason. And the thing is, I don't use the dark web. That's one. Number two, when I open that email and I try to follow the link, it prompts me to enter my email address and basically to log back into my email, even though I am checking that particular email from my email address already. So why would it be prompting me to register or to sign in to my email once more? That's a mega red light, red flag. If you ever come across anything like that, like if you receive an email in your email address while being logged in, and then you follow that link, I mean, you shouldn't follow it, but I mean, be careful. When you see something like that and you think it's fishy, then just don't click it. But if you do click it for some reason, like I did stupidly, and it does prompt you to enter your login details, that's a red flag. Do not enter your login details because you're already logged into an email account. And definitely when it comes to crypto wallets, do not provide your private keys or your wallet backup keys. Never ever. They will never ask you for that. If any email or if anything, anybody ever asks you for to provide them with you private keys or backup keys, don't ever do it because that's unnecessary. And if it does happen, if you do have problems with your wallets, these guys will never email you. It's usually, think about it, whenever you have a problem, these guys don't run around. They've got thousands of customers to serve. They never run around looking for trouble. They never run around and message people randomly, trying to figuring out who's got a problem, who doesn't have a problem. It's usually the customer with the product that encounter the problem and then they contact the support. The support never contacts you first. That's basic rule, right? So if you ever get a stupid email in your email account saying, hey, we discovered a problem with your hardware, just know that they didn't. That never happens. You're the one, you're the user, you discover the problem with the hardware and you contact support. It's never the other way around. So just keep that in mind and you should be safe. But so in the case of Trezor, they have contained the problem. Trezor clarified that there was no internal email system breach or third-party compromise. Instead, attackers used their automated response system against it. The phishing emails urged users to reveal their wallet backup information, a highly sensitive key that grants access to all funds. Never share your wallet backup. It must always stay private and offline. Trezor will never ask for your wallet backup. The company wrote on X. That's what they did. Trezor says the exploit has now been contained. However, the company is actively researching additional safeguards to prevent future abuse of its support infrastructure. And Arthur Hayes believes that the money printers are revving up again, which means that Bitcoin will be pushed to ultimate highs as it's going to force investors to flood into Bitcoin as a hedge against currency debasement. So all the money that's going to be printed out is going to be going into Bitcoin based on what Arthur Hayes is saying, because obviously the more money there is in circulation, the less valuable it will be. And of course, prices are going to increase on everything and the value of the overall dollar will drop. So the idea is that all that is going to be printed is going to be put into Bitcoin because Bitcoin stabilizes, the value of it goes up. And so that's the presumption. Hayes says he does not believe in a 4-year cycle, which used to be widely accepted as the norm by many crypto investors. The 4-year cycle is based on the idea that Bitcoin follows its halving when Bitcoin miners' rewards are cut in half, which happens roughly every 4 years. Yes, we know what that is. I don't like to use the number of years cycle dogma. The cycle is what the cycle is. All I care about is how much liquidity is being in the market. What's the expectation of the market going forward? What's the future discount rate of liquidity and how does that change versus... I don't know what... I don't even know who this is. Honestly, I don't know who this guy is. Arthur Hayes. I guess he's the CEO of BitMEX, and apparently a lot of people are writing about him. He seems to be the guru. And like I said in my previous video before, Andreas Antonopoulos is the true guru. This Arthur Hayes, if this is a direct quote from him, then he doesn't really sound very well spoken. So anyway, the point of this article is that the money printers are being turned on quite possibly very soon. And if that happens, of course, we know what happened in 2021. Bitcoin exploded, and if that happens once more, then we probably can expect that to see that happen again. And apparently the war in Iran right now, or the war, I guess the strikes in the Middle East, are not really affecting cryptocurrencies, or at least Bitcoin, all that much, because Bitcoin did recover quite nicely. Jupiter holders panic sell after 80% crash, dead or buying opportunity. So Jupiter crashed about 80%. Jupiter suspended DAO voting amid 1 trillion volume milestone and 174% rally prediction. So we had Jupiter here at $1.40 and it dumped to $36. Following its last venture above $1 in February, the Jupiter token has maintained a relentless bearish trajectory, shedding over 33% in the past month alone and plummeting 82% from its past launch peak of $2.04, and that's usually what happens with newly launched projects. It took a little bit of time for the initial investors to start dumping their tokens on the market and in recovering their liquidity, but that's what usually happens. That's the folk of altcoins. So be warned, all those new projects, man, like 2017, 2018, I've learned my lesson. I've said it time and time again. Whenever I hear somebody talking about a new project and potential insider investment, invest early and this and that, it's all crap. Don't invest early into projects unless you're doing it over the counter and you're getting some discount prices because you're investing into, you providing massive liquidity for that project. But be warned that even then, if you're not able to dump your stash with a profit ASAP as soon as the token's launched, you will see somebody else dump on you and your investment will lose value, because that's always the case. There's hardly any project that was launched early on and skyrocketed and then maintained its stance at a high level of value. Most of the time, newly launched projects, they might skyrocket and it might take some time. It usually doesn't. It usually takes days. In special cases, it might take a couple of months or a few months. But in most cases, all newly launched tokens dump and investors are left with bupkis. So be warned, do not invest money into these ICOs, because you're like 99%, you stand a 99% chance of losing what you've invested, and then you're stuck. And if you're lucky, maybe in a couple of years that will recover, but for the most part these projects don't, and like 90% of them disappear entirely. Here's a post by a Jupiter investor. One trader who liquidated his substantial holdings around 70% expressed disbelief, stating that as Solana's most recognizable token, nobody anticipates Jupiter's descent toward worthlessness. Thank God I sold my last Jupiter at 70 cents. It was probably just luck, because being the most well-known token on Solana, you wouldn't expect it to drop to zero, but still, I guess no real utility plus big unlocks, it is what drives the price. Phew, dodged a bullet. Yeah, exactly. If, there is a lot of hype, basically price pumps on the hype initially, and then of course if there is no utility, as apparently that was the case with Jupiter, and you see big unlocks, and of course the price is going to dump massively, which is the case what happened with Jupe. Over 130,000 traders wrecked as Bitcoin's price goes on wild roller coaster. The quick recovery escalating global tension, which has expanded beyond just the Middle East region, continues to impact the cryptocurrency markets. Following the latest development from today, Bitcoin's price tumbled once again below 100,000 before it shot up by over $3,000 in hours, harming thousands and thousands of over-leveraged traders. Those short people, the people who are shorting Bitcoin, do not short Bitcoin in a bull market, yeah, idiots. On the surface, today's developments couldn't predict the latest Bitcoin price pump. As the chart above demonstrates, Bitcoin slumped hard yesterday, and even though it recovered some ground earlier today, it dumped below 100,000 once again following Iran's attack against a couple of US military bases in the Middle East. However, certain theories circulated online that Iran's precise action symbolized the beginning of peace talks, as the country's leaders reportedly warned the US and the targeted military establishments about the missile strikes. The total value of liquidated positions is close to 440 million, and Ethereum has taken the main stage, outpacing Bitcoin. This is mostly because ETH went from over 2,400 to under 2,200 and back to 2,300 within hours. Leverage trading is a risky game, people. 440 million, my goodness, that's a lot of money. Imagine what you could do with a fraction of this kind of money. Do not leverage trade unless you know what you're doing And in most cases, even the people who think they know what they're doing, they get liquidated because obviously they don't. So markets are unpredictable. Stay away from that stuff, man. I've always had an issue with connecting my crypto wallets to websites like CoinMarketCap. Every single one of them, CoinMarketCap, in the past days, Blockfolio had a way to connect your wallet to track your portfolio, to track your crypto, and I never understood why people did that. It didn't make any sense to me personally, and so this is a perfect example why you shouldn't do it, why you shouldn't connect your crypto wallets to places like CoinMarketCap or any other price aggregators. I mean, what's the point of it? 76 wallets drained in CoinMarketCap front-end exploit. Basically, this means that people, there's probably most likely more than that, but these 76 were unlucky enough to fall for this exploit. So you connect your wallet to CoinMarketCap or CoinGecko, which allows you to track your portfolio through CoinGecko, and I don't know, compare it to the rest of it. I have no idea what you would do it for. I mean, if you really want to track your crypto, just do it by looking at your crypto wallet, man. Why would you need to connect it? So these 76 connected it to CoinMarketCap, and I guess it was drained. A security flaw on CoinMarketCap's website let an attacker briefly add a malicious pop-up onto the homepage that resulted in victims losing thousands of dollars. The MetaMask team warned users on Friday evening against connecting their wallets to CoinMarketCap's website because the coin tracker's front end had been compromised to push a wallet drainer scam. And the thing is that once the money is drained, there is nobody that can do anything about it. Literally, you can't complain to CoinMarketCap, you can't complain to MetaMask, because all of these companies will wash their hands off the problem because it's not their doing. It wasn't their fault per se, it was the hacker that installed this pop-up on CoinMarketCap. And so even CoinMarketCap will wash their hands off it and say, sorry, that's, it's not our fault that we were hacked, basically. So don't connect your crypto. You're exposing your bank account to, imagine doing that, like connecting your bank account to a website to keep track of what's in your bank account. Why would you do that? How ridiculous is that? And yet people keep doing it. So don't do it. That's a warning. Stay safe, stay secure. Get a Descent wallet. Right now you can get a Descent wallet with a $99 discount if you purchase it through the CryptoFather ref link that is below the video. You get a bundle of 2 for a discount of $99. If you purchase one of them, you get a $30 discount. So actually you get a much better discount with the bundle of 2. So get both of them, get one of them. Whatever you do, store your crypto on the Descent biometric wallet and never lose it again. And don't connect it to CoinMarketCap and other stupid websites that will have access to your wallet. Why would you want to do that? In any case, the ref links are below the video, so check those out and get yourself some safe way of storing your crypto. Where were we? Right here. Okay. Will Ethereum price hit 3,000 or crash after BlackRock sell ETH? The market was shaken after BlackRock, the world's largest asset manager, reportedly sold a portion of its Ethereum holdings for the first time in over a month. According to CoinBureau, BlackRock sent 8,172 ETH to Coinbase Prime, making a shift after accumulating over 750 million worth of coins in June alone. This is, it's not happening just yet, but this is a sign, reminder that there will be a bear market, that there will be a sell-off because these companies will be taking profit. So just keep that in mind. The 4-year cycles, Arthur Hayes doesn't believe in the dogma and all that nonsense. Everybody wants to look unique. The 4-year cycle will continue. Maybe it's going to be smaller. Maybe we're not going to experience dumps like we did in the past of 90 or 80% dumps on Bitcoin, because there's just a much larger accumulation of institutional investors. But retail will still freak out. And you see the dumps that are happening right now on Bitcoin based on some news that are coming out, right? You see what happens whenever there is an announcement. These retracements, like the one we saw here, this was a retracement of I think 30% if I'm not mistaken. Yeah, 32% retracement. So these retracement will happen. So this is not even a bear market scenario. This is just a retracement on whatever news that was in January, since January until April. Couple of bitter months. But point being, there will be a bear market. There will be a massive crash. That's going to happen. So don't be fooled by people like Hayes saying that there won't be a bear market or something, that the 4-year cycles are done. And the last one, Solana versus Litecoin. Who's closer to that sweet ETF approval? Bloomberg analysts recently gave Solana, XRP, and Litecoin a massive 95% chance of approval. They said the SEC's recent engagement was a very positive sign, and the markets jumped on that instantly. Solana's ETF odds have been comfortably above 90% for days. Litecoin not quite there. It started gaining steam only after one of those Bloomberg updates. Right now, Litecoin's odds sit at 83%, which, while not bad, is still a few steps behind. And again, ETFs are good, but remember that investing in ETFs is not like investing in actual crypto. You're not actually holding the cryptocurrency itself. You're just investing into IOU notes. But Solana might have the edge with Gensler stepping down. The SEC's tone has shifted. They're showing signs they might play ball with more ETF approvals. And between Solana and Litecoin, there is a noticeable tilt towards Solana. Why? For one, the Solana ETF proposal includes a staking feature, which is a pretty big structural change. That alone has folks intrigued. Also, let's talk trust funds. The Grayscale Solana Trust holds just 0.1% of the total supply, no discount history, minimal disruption risk. Meanwhile, the Litecoin Trust holds 2.65% and trades at a discount, which could invite post-approval sell pressure. Not exactly ideal. On top of that, Solana has more filings in front of the SEC than Litecoin does. Pair that with stronger adoption and clearer regulatory vibes, and it might be Sol's race to lose. Somebody else said that the Litecoin volume may not be big enough to carry an ETF. So I guess we're gonna have to wait and see. Hope for the best. It would be great if Litecoin made it into the ETF Hall of Fame, because of course that would pump the price. But Solana will do just as well. Make sure to, once again, remember to pick up the Descent wallet, smash the likes on this video, subscribe to the channel, leave me a comment in the comment section below. Also, that's where you will find the links to the discounted Descent wallets below the video. So pick those up right now, store your crypto on the wallet. Do not connect to CoinMarketCap or any other website that says that will track your portfolio. What the heck is the point? You're already tracking it on your phone or in your wallet yourself. So don't bother with hooking up your crypto wallet to any other websites. It's pointless, it's redundant, and it's dangerous. Stay safe out there. I will see you tomorrow. Have a fantastic Tuesday. Peace.